Welcome to my morning report analysis videos on Friday the 3rd of February with me, Richard Perry, market analyst at Antec Markets. It is non-farm payrolls day, and we've got markets that are relatively settled on the Forex, but you actually got a slight gain across the equity markets, interestingly. Wall Street is basically flat overnight, as were Asian markets, sort of fairly mixed, but you've got a slight sort of move to the upside, actually, with these European equity markets. The dollar is the main mover in terms of yesterday. It rebounded into the close and it sort of drifted higher again today. Nothing too significant, but very mild dollar strengthening. Does it turn around the trend? Nothing yet really, and there are some interesting moves on the Forex majors, but nothing yet confirmed in terms of a turnaround. But you've got these treasury yields which have picked up as well on the 10-year and the 2-year, mildly higher, but nothing significant in front of this payrolls report, which to be honest will, I think, drive direction in the coming days. Speaking of payrolls, that is the main focus for today. Just find the data. There you go. And basically, non-farm payrolls are expected to be 175,000, which is underneath, as you can see, underneath the 6-month moving average. And this is sort of, it would be fairly sort of typical of late cycle employment growth, which is less than the 200,000, because you've got less supply really as the market moves towards sort of higher employment levels. 4.7 is the expectation on the unemployment rate. That's no change from last month. So the interest will probably come from the average hourly earnings. Now, average hourly earnings are expected to be 0.3% for the month, which is slightly down on the year-on-year basis from the 2.9% growth last month, but certainly it still would be a positive number. So the market's still looking to gain traction in this gain in average hourly earnings, which will continue to improve as the employment levels sort of start to flatten off. Underemployment is interesting as well. U6 unemployment, which fell to 9.2, but you can see 2007-2008 levels sort of below the 8%. Sorry, the 8.5, 8 to 8.5%. So there's still a little bit of room, but it sort of has been accelerating lower in the last couple of months. But certainly non-farm payrolls headline and also the average hourly earnings will gain the focus, I think. We've also got an enormous sort of the service sector data, which is out throughout the session today. We've already had the PMIs for Eurozone. Now that came in mildly better than expected across the board, pretty much. French, German and Eurozone generally on the composite, mildly beating, so pretty decent numbers there. You've got the UK service sector PMI out soon, slightly down to 55.8 is the expectation, but we've been rising for 3 months in a row now, so that would be a slight sort of move to the downside on that. But then the market sort of looks towards the obviously payrolls data, as I've just spoken about. But then at 3 o'clock we've got the ISM non-manufacturing PMI. It's again a slight dip to 57. Then the factory orders expected to be at 1% month on month. So quite a lot going on today, and obviously the payrolls will take the focus, but still quite a lot other than that. Now the chart today is the DAX. Now we've seen equity markets being sort of sliding back in the last few sessions, and lower highs on each of the past few sessions for the DAX have just completely and utterly unwound the DAX back towards this sort of breakout level. And below the breakout level 692, 11692. It's back towards that and below, and it started to trade below that, and you see these momentum indicators which are sort of still just drifting lower. The RSI is above 50, yes, but the MACD lines are drifting lower, and the stochastics started to turn up a bit in the last couple of days with these sort of green candles, but still it looks a little bit corrective, doesn't it? And you look on the hourly chart and you've got this downtrend that's in place today. Again, we've hit the resistance. Yes, today's high is 675. Was bang on yesterday's high as well. So we're still running the sequence of lower highs. 723. This 723 to 738, yeah, is the resistance I would be looking out for. The band of resistance that we've sort of been hitting sort of for much of this week really in the corrective mode. So it seems as though that the market is a little bit more certainly neutral, if not more corrective, because you've got the MACD lines below neutral, the RSI sort of it's arguably failing around that 50 level. So very slightly corrective, but you've got this downtrend in place, and if this downtrend continues, and certainly the support at 11603 is key there, that's about 50 ticks away from where we are at the moment. If you break below 11603, you're then sort of back towards this 11535 key level, but for now the DAX is sort of obviously consolidating in front of payrolls, but I think that that support at 11603, 11604 is key near term, and as you can see on the daily chart, that is a big support that pretty much protects the move back towards 11400, which is the big key near to medium term floor now. So bit of a corrective outlook still developing on the DAX, nothing in terms of recovery yet, but obviously payrolls could change that, a lot of volatility expected. But with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.